today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, and we got our man Basil Chapman filling in for Tom this morning. Basil, good morning.
Good morning to you. How are you?
I'm doing fantastic, man. How about yourself?
I'm doing well, and it must be quite exciting for Tom to be doing a webinar right now. He's got everything he wants.
It's quite a market. There's action everywhere, folks. We got weekly jobless claims this morning, 3.84 million. That putting the 6-week total above 30 million. We got earnings in full swing. You got Amazon earnings after the bell today. You have Apple earnings after the bell today. You have Tesla. You have Microsoft shares with action. Right now, we're looking at the S&P's negative down by about 29 points, trading at 29.12. NASDAQ off 250 points. NASDAQ off 32 points, trading at 9,005. The Dow off 250 points, trading at 24,320. Oil, you could say catching a bid, up $2.50 at 17.55. And as you're talking about Basil, I'm sure Tom is having a great day in his webinar. Just started an hour ago. Still time to check that out on the front page, folks, at TFNN, because it's the most wonderful time of the year, as our man Kevin Hinks says. Let's jump over to Kevin Hinks. TD Ameritrade Networks, folks. Fast market right after the show at 11 o'clock. One of the best times to check out the program is almost like this week. FANG stocks with their earnings in full swing. Kevin Hinks, good morning.
Good morning, Tom. Good morning, Basil.
Good morning, Kevin.
Everyone. Here, think about this, guys. Let me paint this picture for you. How do you top yesterday's earnings after the bell with Tesla, Microsoft, and Facebook? How do you do better than that? How do you top those names, right, in terms of names that drive the market? How about Amazon, Apple, and I'll throw a little extra one in there. How about Gilead, the maker of the vaccine? All those have earnings today after the bell. So just when you think you may be exhausted by watching earnings from yesterday, we've got three monsters coming up after the bell today. We're going to cover Apple and Amazon today on Fast Market. And, can you imagine what Amazon numbers are going to look like as the entire economy basically has shifted in the direction of e-commerce and Amazon? So these numbers might be staggering, guys.
So I got Amazon, Kevin, up on the Analyze tab on the Thinkorswim platform, and they're looking for $137 expected move coming into earnings. Could you talk about that number, Kevin? We've talked about it before and just what it really implies. I know that's, the implied volatility of kind of this event we're waiting for, but how that gets calculated, because it's something I'm always looking at this week especially.
Sure. On the Thinkorswim platform, right in the middle, on the top of the page, whenever that, the column on the right side of the Thinkorswim platform on the trade tab has the implied volatility for each expiration. When the front expiration implied volatility rises above the second expiration, that market maker move, the MMM, automatically appears. You don't call it up, you don't find it, it appears when that happens. Now, that move, that market maker move that we have on the Thinkorswim platform that is currently $138.50, let's say, for Amazon, that is the expected one-day move off the earnings event. And so if you're wondering, based on the implied volatility, how much they think Amazon can move up or down based on earnings, that the Thinkorswim platform gives that to you every time that front expiration, the implied volatility goes above the second expiration. That triggers an event that we measure and calculate the expected move, guys.
It's pretty cool, man, especially when you look at options, because whether you're buying volatility, right, whether you're selling volatility, whether you're long or short volatility, that's how much volatility is getting priced into this. I mean, Microsoft, quite the pop yesterday in terms of from 172 and Google shares especially. I think Google, Kevin, their move was about $60 on their earnings on late Tuesday, and that stock about $100, just crushed it over what they were looking for. But I'm with you in terms of I can't wait to see what Amazon puts out, man, because no matter what happens, I think on the profit side of things, I can't wait to see the revenue side of things and how much money.
Right, exactly. And so remember, we just got income and outlays with consumer spending now 7.5% in the last month. Well, you can make a case. There's winners and losers in this economy, and you have to think that Amazon's numbers are going to be massive. The real question for Amazon, really, as we start to thaw out and come out of this shutdown for the economy, is how many of those people that have switched over to Amazon for the first time, how many are going to stay there? How many will go there and never leave Amazon again? So, yeah, Amazon's got a $139 move, guys. Apple has a $10.70 move. All of those demonstrated by the market maker move on the top of the Thinkorswim platform page.
Pretty cool. And then oil, just on the commodity front. I mean, quite a rise here from, the depths of $10 early Tuesday morning to fast forward to Thursday. And it's been an uptrend the whole time, sitting at 1763. Maybe some of that crazy volatility having to do with some of the ETFs out there, the USOs of the world, rolling into later months, which was causing all that selling early in the week. But I think that probably helping some of the market as well. We talked about it before when oil was kind of trying to find itself a bid, but today it looks to be finding a bid for sure. Maybe finishing out today, this week, almost at 18 right now.
I agree completely, Tommy. I think there's a direct correlation between a stable, calm crude oil market and a stable, calm stock market. I think a week ago, that Monday and Tuesday sell-off, I thought the uncertainty in the crude oil made for a very jittery stock market. And what I'm really watching, and because of my grain trading background, I watch the calendar spreads. And the front month, the June contract, is now gaining on the rest of the back month. Remember, If you go out to the September or October contract in crude oil, they're trading $26 and $27, not $17. So that relationship between those two that really diverged is starting to come back in line a little bit. That's really what I'm watching, guys.
It should be interesting, man. Weekly jobless claims, we're at 30 million now over 6 weeks, and the market all but expecting it, but a little bit of weakness so far. And today, the final day of April, right? I was reading earlier S&Ps yesterday. I mean, we're up almost like 13% for the month. S&Ps, it could be the best month since sometime in the 70s, I think. The Dow as well. And tomorrow starts May trading. So, Kevin, of course, we look forward to the show, man. Amazon, Apple, it doesn't get much better than that. It's kind of like if you script it, right? You start off with the FANG stocks, and why not?
Tommy.
Right? All right, Kevin, we appreciate the update, man. We look forward to the show at 11. And listen, have a great show, have a great day, have a great weekend, man, and we'll talk to you next week.
Always a pleasure being on. Have a great day, guys.
Thank you, Kevin.
You too, Kevin. Folks, check it out. If you're going to watch Fast Market any time of the year, earnings season, always a great time setting up trades on those companies with earnings kicking it in. And Basil, we'll talk about it more in the program, but it's interesting. Both of those companies are positive in a decent way ahead of their earnings. Amazon and Apple positive with the markets in negative territory.
And we can discuss it when we get back. It's a very interesting charts. Yeah.
All right. We'll be right back, folks. Stay tuned.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. S&P is negative by about 30. The Dow off about 267 right now. The NASDAQ only off about 48 points. I got Amazon up there right now, trading 24.39. The all-time high, 24.61 as of April 16th. Amazon. Basil, it's always interesting. Amazon in particular, with Bezos at the helm, he's been always concerned with growth to the top line, right? As in revenue growth and growing the company. And so I think, like I just mentioned to Kevin, not that I don't care what happens to profitability, but as long as this company is growing, and I think the market just figured that out pretty quickly as everything got sold off, I can't wait to see what kind of numbers they put up, because I think they're going to be staggering. And I think, and I'm biased. I've been a Prime member for like 9 or 10 years. I think I went back, Basil, and I looked up when I became a Prime member, and then I looked at the price of an Amazon share at that time, and I said, sometimes folks, you got to believe in what you're doing personally. If you're giving your business to somebody because they're providing a great service, just be aware of that sometimes, because it's been gangbusters. But we'll see what happens. And I see the peaks all over that. I see a D on the monthly, Basil. I see some Ds and As on the weekly and the daily. Let's get into Amazon and what we're seeing in the Chapman Wave.
So there are a couple of things that are very interesting. First of all, Jeff Bezos has been a very quiet leader. He years and years ago, he used to be interviewed on CNBC, and Kernan, what's his first name?
Joe Kernan.
Yes.
Joe.
So he
yes.
would always make fun of Jeff Bezos' laugh.
Okay.
He actually kind of ridicule him. It looked like it was fun, but it wasn't so nice.
Poking a little bit, sure.
And I could see over a period of 3 or 4 quarters, he didn't like that, Jeff Bezos.
Yeah.
And then that was it. And then he just said, media, that's not for me. And he went about his business. His business plan, probably in textbooks for the next century, they'll be looking at this, because in every single area that he participated in, he dominates. And it's really difficult to do because you have to have a very big concept. You have to understand how you can maneuver through the morass. I mean, there are pitfalls in business everywhere. And he just managed to overcome each one of them. So I have a tremendous admiration. Now, you can talk about other things about Amazon, but what they've done is very much like the Sears and Roebuck book that they used to have, that big book that they'd send out to people back in the 20s and 30s.
I remember as a kid filling out my Christmas list on those books,
So that you cannot ignore that this is the cutting edge technology of the 21st century, that he's developed a particular business plan, that he's constantly stuck with the plan. Well, we don't know, but most of the time it seems that he succeeds in what he wants to do. Occasionally,
the attention to detail. I was just going to say the attention to detail is what I always, everything delivered in 2 days, because I've actually had some tough run with Walmart recently, which is their maybe second best to Amazon in terms of availability of items, so forth. But I had a pickup item at Walmart. I went to go pick it up, and they said, we're sold out of that. And they hadn't even sent an email to say they were sold out. At Thanksgiving, we ordered things. We ordered things on Walmart on Black Friday. They actually showed up like 2 days before Christmas, Basil, 5 or 6 weeks after they had been ordered, because they were on back delay. There's all these. So you see how even a company as great as Walmart, the point is they can fail on the simplest of things, whereas Jeff Bezos and Amazon understand that if you say you're going to get somebody an item in 2 days, it has to be there. It has to be there reliably. And they've kind of like perfected that process, which is
absolutely. So let's just get that out the way. Now, chart-wise, the monthly chart is only now just breaking out in the MACD, has just crossed positive, and we're about to close the month. So therefore, I can say unless there's a 1,000-point drop, Amazon monthly chart has crossed positive. The stochastic is okay at 74%. The on-balance volume is a little choppy, so it says, keep that in mind. The weekly chart, I don't know, this is tough. I've got a number of these charts. They've broken out from the lows that were made about March the 23rd, and they've soared up to new record highs, and they took out the starting point of, in the Chapman wave, we look for the lowest bar, and then we start counting bars. When you get to D, E, or F, and you see a sharp pullback, if that pullback takes you way under the starting point, you have to restart a buy mode. So this is really a buy signal, let alone a buy mode. This has gone right from 1626 on the 23rd to where we were, 2461 round number high with a round number low the same day. And that was right there on the 16th of April. And then what have we done? We've consolidated by going sideways. And we've got 3 round numbers. We've got 2400, 2335, and 2461. I consider that always very important. And what it says is, if you break above, the price, if it breaks above and holds above on the upside, a round number of importance, especially if it's at a high, especially if it's at an all-time high, if it does that for 2 out of 3 sessions, it's eliminated the resistance of that high, and you can go even higher. If that becomes a repellent, and this is why it's so important, we're sitting at 2432.96 right now. High was 2444.98, still underneath the 2461 round number all-time high. So that just makes it very clear for me. Now, what happens in the outlook is they can't have a very certain outlook because, as was mentioned, I think Kevin was mentioning, what happens afterwards if people think we get back to not normal, but we start to get back where people can go to the stores. And what about the new people who have enrolled for either Prime or at least got into Amazon? Well, my contention is that once you're in, you kind of use it for what you want, but maybe not as much as before. But you become now a user of Amazon. That's what they want, to get the numbers up.
You're in the ecosystem, yes.
You're absolutely. So I think that for me, the numbers are really clear. Give it 2 weeks. So we are on, let's say, the 15th of May. If by that point we've broken above 24,008, they make it 2485, about 20, just more than 20 points from the most recent high. Yep. It's trading there. That says to me that weekly chart is probably in a leg B, and that even if we have sharp pullbacks, it should go higher. If, in fact, we start to break down and we go underneath this rectangle formation, that's usually a containment area. You can see how long a rectangle, stock like Amazon, we've been since, what did I say it was? Since April the 16th. It's over 2 weeks, and we've been stuck in a range. So if we close underneath 22.79, that is, that means that's resistance. I'm just making it as simple as I can.
Yeah. Perfect. Well, we'll find out at 4 o'clock, man. And the numbers that they are looking for are pretty staggering. They're looking for $73.96 billion, so call it $74 billion. And that's going to be, Basil, almost a 24% rise of revenues just from a year ago. I mean, isn't that staggering? I mean, they're growing their revenue almost 24% from 2019 numbers when they already owned the internet.
Wait a minute. This is not a startup. This is a mature company.
Amazing. I know. Stay tuned, folks. We'll be right back after the break.
Hi, folks. This is Tom O'Brien. On Thursday, April 30th, I'll be holding an all-day online seminar where I'll teach the essentials of my trading methodology, Timing the Trade. From 9 a.m. to 4 p.m. Eastern Standard Time, with a lunch break from noon to 1, I'll be covering quality volume, ABC structures, Fibonacci confluence zones, cause and effect, swing points, and much more, all while the market is open in real time. When you sign up, I'll mail you a copy of my best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. You'll also receive a free month of my daily trading newsletter, Market Insights, a $169 value. This 6-hour online seminar will be archived if you can't attend the entire day live. My Timing the Trade webinar is taking place Thursday, April 30th, so don't wait to sign up. For all the details and to sign up today, visit the front page of TFNN.com.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. One thing I'm going to pull up here, Basil, have you seen the action in the currencies, the dollar index, the DXY even, since about the last hour? We were trading up there at 920, at 99. Look at that, 99, 703, 99,723. We're trading right now 99,300, basically 420 ticks. And I saw that because if you look at the euro US dollar, we just spiked from about 108.40 to 108.93 on that number. And as we're jumping around here, I'm just going to jump with, I think we just got natural gas numbers, Basil, and I just wanted to see how the market's reacting. These markets not too determined by the inventory numbers anymore because of the general market volatility, but you got natural gas right now trading at 186.87. So how about perfect. I see you drawing a little cup. Let's get into it. What are you seeing on natural gas quickly before we jump maybe to Apple?
So there are a couple of patterns I'm always looking at, and I'll just show this for one brief second here if I can get to it, if I can even see it. There it is. So in the chart wave, we're looking for the lowest low bar that we can consider the start of a buy signal to buy mode. Buy mode means you should go to at least 4 higher peaks. I alphabetize them, A, B, C, D. You can go to E, F, and G, but it's at D that other things can happen. You can see it can go down sharply, continue higher, and the only other patterns I wanted to show is that I'm always looking for straight line moves, the arch or the cup, or you can get a mix of the lowercase h where you come down sharply, you make an arch formation, and how you retest the low is important, or a reverse Y where on the left side, if you take out the left side high in the cup formation, that's very positive. So here we are. We've got the cup formation. I did draw, but I didn't think it was going to be practical, but I did draw the chance of a left side, right side price time match, which would have gone to, it's now too late. Oh, no. That can go to the 6th of May if there's a breakout. So far there isn't. It's just gone sideways and more like a rectangle formation. But what's so interesting is it's fascinating to me that very often you get chart patterns in completely diverse areas. It could be a stock, it could be a commodity, and yet once those patterns start to take place, you find them all over the show. So this cup formation is one way of looking at it, but the other is we're really in a rectangle formation. And if you look at the USD JPY, that's the dollar euro currency, also stuck. There's that arch formation. And then it takes another one. It's just slipped out of the rectangle. It's at the lower end. If you look at the dollar, same thing. Look at this. You've got your lowercase h that goes to a lowercase m. So I like to just look at these patterns and say, that's the template or the schematic. How does it fit? I drew this in a little while ago, and I say there's a good chance the dollar, which actually for subscribers, we've been long since April of 2018 at 90. It hit 102, almost 103. It's pulled back. It's in a sideways range. But wait a minute. Look at this. Bonds. This is the TLT. It's the same thing. There's your arch formation, rectangle formation. So what I'm saying is that it's very interesting that in areas that are not like the Amazons, not like the indices, but in some different area, kind of peripheral at the moment, we're looking at this kind of sideways action. And I think that that's telling me, and that's what I was saying to subscribers to my opening call the other day. I said, I don't think it's the Fed worrying about rates. They're worrying about getting this money out. They want to keep money out there so that people can survive and that the economy can at least keep going for the next, maybe we think, well, I'd like to think 6 to 8 weeks. Could be longer before all the states open up. So I think it makes sense to look at, and I'm just for the moment treating yields as a commodity. I'm saying kind of sideways. The real action is in the Amazons, in the what else is coming? Apple. I mean, Apple, when you read Consumer Report, Apple doesn't rate that highly for a while now. I mean, they've had trouble with their keyboards and all sorts of things. But once people get, that's the whole thing about Amazon. Once people get locked in and they do get some satisfaction, it's more convenient just to stay. So I think that's what we're looking at.
I got my iPhone right here, man. There it is. I'm hooked.
Yeah, that's it. You know, my wife's having trouble with, she's got one of the oldest, she only uses it for encryption and to get into her programs and things like that. But she could have anything. She could have, she doesn't even have to have anything with a picture on it. But at the same time, she's having to look at something new, and it's kind of going to be inconvenience. But anyway, she's stuck with Apple. So
no, and what it is, myself, I'm talking about it. I mean, I'm on an 8 plus. So there's been a couple generations. I
think you're still on a 6.
No, and I know that's not too old. Believe me, I know that this is only 2, 3, 4 years old, something like that. Time flies, whatever it is. But I've found myself that I am waiting for that 5G, and when they come out with a big difference maker, it'll be interesting to see for Apple. They're not going to talk about it today in their earnings. Maybe they will, but just in general, myself, I look at that and I say, that's the super cycle, the big reset. That could be something. We'll see. Because just like the point being, you're talking about once you're in the ecosystem, I think there's a lot of people, more like myself maybe than like your wife, that I'm not a huge, I don't go crazy on my phone in terms of what I do. I have my laptop as well. But if there's a big difference in that 5G, that could be something that really motivates me for the first time in a while to get a new phone.
The other thing is that in your generation, it is imperative that you kind of keep up, because what comes along that's new is sort of the stuff that you might be very interested in.
Sure,
whereas
right.
older generations say, I don't really need it. So in your case, it's really, it's part of the vernacular. It's part of your contemporaries. They're going to be sending stuff to you that needs to be opened in that particular format. So there's a little difference. And I think that that's the generation that Apple has to really keep on top of. They have to innovate, and they haven't been doing much of that, for a little while.
And
so,
no, I was just going to add, Basil, we're getting a little fundamental, right? But 5G, folks, it is going to be world-changing that you can't even think of what's going to matter because it's constant connectivity. Once things are up and running, right? You have to build out the infrastructure too, but things going to move. When you talk about a year or two, especially if we're in this weird quarantine shutdown phase for some time and things extend, we're not even aware yet of what is going to be capable when your phone is literally touching off tower to tower, where it's instantly connected to every single thing at every moment. A company like Apple, really, it's amazing to think where we're going to be.
But Tommy, it's also the speed and the capacity that you're going to get huge chunks of information instantaneously.
Yeah.
And that what an age when you think about the speed of connectivity, and that you can be anywhere in the world and you can know exactly what somebody's doing there. It's
right. And that's where you're going to see self-driving car technology, just to get, that's the type of infrastructure, because you need cars having connected 24/7 to the millisecond, right? All of that stuff being connected, Tesla, whether it's.
So Tesla is the right there. They are, in fact, a high-tech company. That's really their thing.
Tesla up 4% today on their earnings last night, earning a profit instead of an expected loss last night. Elon going a little bit off the hinge on the earnings call, but Tesla delivering. Stay tuned, folks. We're going to take a break for 3 minutes. We'll come back. We'll see what else we have on tap for Thursday trading. Stay tuned. Basil and I will be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tommy O'Brien, joined by Basil Chapman this morning. S&P is negative by 27. The NASDAQ negative by 60. Dow off 238. Interesting that the market open, seeing right on the bottom there for the S&Ps, trading at about 28.93. We're exactly 20 S&P points above that level, down about 1% right now on the S&Ps. So I see you got Tesla up there, Basil. Quite a performance. Amgen.
I had Tesla. Now we've moved on because Amgen comes out at about 4 something this afternoon.
Perfect.
Comes out with earnings. So it's so interesting that the very old companies, like Microsoft back in 2000, it took such a hit, and then it took a long time, and then they completely reconfigured the whole place. I mean, it became an entirely new company. So Amgen, in a sense, has done the same thing. Look, Amgen, old-time biotech company, beautiful left side, right side, time match. It goes to a new recovery high. Well, I think it missed it by a couple of pennies. Yeah, it goes to a high a few days ago of 244.95. Back in December, it went to 244.99. What I'm absolutely fascinated about, and I discussed this, I think it was after the December of 2018 low. That's right. We had quite a number of stocks. Remember, I was talking about patterns that repeat, even though completely different categories. We had a whole bunch of stocks and even indices that made this semiconductor was a good example of made this incredible V-shaped turnaround. Look, when you go from let's call it 245 in December, and 3 months later you're down at 177. I would call that quite a hit. And 1 month later, on a candle basis, 1 month later, you've just hit the same level of 245, 244. That V-shaped pattern, that's quite remarkable. It almost looks, and this is the thing that I've been discussing, I don't know if I'm going to be right, but the move that we had with coronavirus smacking the world markets from February into March really aborted an incredible bull market. So now you've got to look at it and say, and I'm looking at Amgen, and this really is the proof of the pudding. This is a market that looks like it was interrupted in its big bull move going to a leg D. So we'll see what happens with the earnings today. But if it makes a new recovery high, besides being really impressive, it's just telling us that the infrastructure within some companies, and I would like to think, looking at maybe 6 weeks or 2 months, in some indices, is so strong or was so strong that even the most virulent and most decisive smackdown could not change it from its trajectory, which was to go to all-time highs. So this is very interesting because you've got your cup formation, or almost like a V-shaped formation. We'll see if it's able in the next few days, averaging to close above, let's call it 245, or if there's a problem and it closes under 228, then it's two different trajectories, at least in the shorter term.
Yeah, one of the more remarkable things is how every single thing got sold down in this market, right? When you could have seen that even in the worst scenario where everybody's stuck at home, of course, some of the companies that provide services to people in their houses, such as delivery, meal service, office equipment, the certain niches, the rebound has been dramatic. Biotech in some areas, some chip stocks. I mean, even just some of the FANG stocks, let alone Amazon.
Semiconductors, the chips are everywhere. Chips are in, you name it, there's a chip, right? In fact, it's even in people. So what we're looking at is the semiconductor index goes from right here, goes from 152. And that was in February. And it plunges down to round number 96. And it takes off and it gets to 139 just 2 days ago. 139.36. That's quite a comeback. And that's an area that should be telling us a lot about companies looking to the future, because you've got to order these things way ahead. Or what happens is they stop. And then the semiconductors, it's like beep, beep, and they stuck, and they've got all these anticipation of orders coming in, the billing coming in, and people and manufacturers don't come in. And yet, look at this, 96 to 139 in a month and a half. That's just saying that there was a lot of optimism, and let's see if it continues, because if in the next, we're about to wrap up April. So let's just say middle of May. Let's make it the third week of May. Let's look at this. If the semiconductors are above 145, that's kind of way above 50 or even 60% of the retracement. If they're in the 145, 147 area, I would think that that's very positive. Yeah. As an outlook for the whole industry. But if it's the industry, then it must include other areas. So those other areas.
I was just going to add to it, and I totally agree that there's no reason they can't when you have everybody on the internet using whatever they can, whether it's, Facebook numbers through the roof in terms of engagement. You just saw Amazon numbers up 24% of people ordering things online. Snapchat, for instance, talk about stocks that got pummeled and then rebounded. Snapchat went from $20 down to $8, and we're now trading at almost $18.
It's up double. Yep.
Double. Not surprising, right? That if you think Snapchat's going to be around, which I imagine they are, that just the number of people sitting at home being online, let alone the Facebook. Look at that rebound from under 140 to almost 210 today. And all the FANG stocks. That's why I think it's even more interesting than it would have been, because the bar is set pretty high for Apple and Amazon tonight, man. Everybody in their sector has delivered pretty strongly. Expectations for Amazon just about as high as you can get, with that stock going from 1,600 to almost 2,400, since the last 4 or 5, 6 weeks. So we'll see what happens, but. I imagine, like you said, I've been in that ecosystem for 9-10 years. You got Amazon Prime. People are going to be watching more programs. It comes with Amazon Music. You're delivering more items, free delivery, 2-day delivery, all that stuff. Let alone just
when you get used to this 2-day delivery.
I go in there, Basil. I go in there when I'm searching for items, and I check the box that says just show me items for Prime. How they have items that are Prime, and then they have other items that aren't. I say, just show me the Prime items, man. That way I get my 2-day free delivery. And things are a little bit longer right now, but But when things resume normal factory orders in terms of 2-day delivery, some of those items are 2-3 week delivery right now as Amazon struggles to keep up. But it's interesting that they're up so much even after the run they've had, to be up 2.4% today ahead of their numbers. The market down 31. And as we mentioned, that Analyze tab, $136 for Amazon right now, the market looking for. And Apple shares, $11 the expected move from $291 after the close. Okay, folks, stay tuned. We'll be coming back to wrap up the program. You get the S&P's negative 31, the Dow up 260. Stay tuned, folks. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So some news hitting the tape. Boeing demand for their bonds is strong. They could raise as much as $75 billion in 5, 7, 10, 20, 30, and 40-year bonds. They are going to need some cash to weather this storm, but check out that pop on the open. As the markets trailed off, you have Boeing up more than 3% at 143, still in a max pain situation almost, though, for Boeing. Talk about a collapse from about 350 down to 89. We've just been bounced around this lower level since about March 31st. So where are you going to go for your program, Basil, at noon?
So there are a bunch of things I wanted to look at here. I'm going to show in the Chapman Wave automated support and resistance levels. I'm going to show how in the Dow, in all the different indices, we're right at an area where, for the first time, we start. You can see these green numbers right here in the daily. A lot of resistance levels. We were looking at Apple just a moment ago. Look, Apple has between 291 and 297, a ton of resistance levels. I'm going to be showing these automated. These are based on certain parameters that I gave an engineer at some point, and I use them just to see exactly what support and resistance levels. But at the same time, I wanted to also show in the different indices that we are. I spoke earlier on that we can go to an E and F in the daily charts. We're looking at many of these. We're at a resistance point, and I'm going to be discussing, I wonder if this is up right now. I'll just do it real quickly. You remember I did a webinar. It was called, here it is. It was called Dark Cloud News Cover and how the market responds to news. So I was talking about this yesterday, and I suspect we're just about to get to a level where there is going to be some news that's going to aggravate the market a little bit, and I'm going to be talking about that.
Perfect. Well, we will tune in at noon, Basil. Thanks so much for joining me for the program. I appreciate it as always, man.
Great to be there. Thank you very much for having me.